Peter McGuire, CEO of XM Australia, sitting in Asia, the big demand center of the world, certainly on incremental oil demand growth. The forecast, China is to offer up 700,000 barrels of demand growth this year. Not yet obvious that that's happening, but generally the second half of the year demand growth does increase, and maybe OPEC's sort of call here is yet to show itself.
Well, exactly, Sean. I tell you what, China's starting to, it's had a nice little rally since Lunar New Year, and the overall consumption is growing. Also, from an economic standpoint, it's grinding away. It's nothing like India, but it's certainly producing relatively strong GDP still. And the overall mood there, I feel if you strip out the property market, it's still one of relatively good confidence or strong confidence. And the appetite, if you're looking at what their consumption is from base metals as well, has been very bullish. So I feel as though that, heading into this summer period, we could see an increase as far as demand for China. And the overall theme across Asia is one I think is relatively bullish, not necessarily that bearish.
Peter, what is out there as we look ahead from the point of view that could turn this trend around? As I said, 2 months in the making now, this downward move on oil prices, and while all other commodities are moving in the other direction, what could turn this around, stop it from falling? We've got the ECB meeting this month. There's growing expectation that they will start cutting rates, the beginning of that sort of easing cycle. Would that do it?
Well, Sean, first cab off the rank is going to be Canada, and that'll be something that'll happen probably next few hours. So yeah, rate cut there, and then they'll beat ECB to the gun, and that's tomorrow. So I think successive rate cuts from both of those central banks over the summer period. You've got non-farm payrolls on Friday. From a geopolitical standpoint, everything's been very much evaporated, as we all know, and as Ali has said, and certainly Jamie, all the hot air has come out of the crude market, and I think it's taken everyone by surprise how savage it's been as far as the downside or that downdraft. What can happen? Geopolitics can tick up again. Obviously, there's no issues there from a production side, and maybe you've got to look at what the situation is. These ongoing concerns, naturally, Russia and Ukraine, North Korea firing missiles over Japan, what's happening with China and Taiwan. Certainly the Israel-Palestine situation hasn't been put to bed in any fashion or form. And so there's powder kegs happening everywhere, Sean. And then you're thinking about rate cuts. We've had a really solid downdraft on some of those base metals. Copper's back under 10,000 a metric ton it had a high there of about 10,600, 10,700. So that's given up a lot of hot air as well. And I'm expecting US dollar to take a rally, considering you've got those 2 rate cuts for those central banks in the next 48 hours. So US dollar could continue uptick there. You've got volatility. If you're looking at the S&P 500, you've got 20.3 times earnings for the S&P. So that's an unheralded sort of multiple. And then if you're taking the volatility of the VIX, Sean, the VIX is sitting at 4-year lows. We haven't seen the low of this since really the dot-com bust, or when you're looking at the GFC. So there's a lot of moving parts in this. And is that rally going to continue as far as equity markets over the summer period, or is that going to start to dismantle? We're 5 months today from an election, Sean.
Peter, I wanted to give you the last word. Obviously, any other day of the week in our podcast would be a massive story. India's election result and Narendra Modi not getting a majority. I think that's probably the shock of the year so far.
Yeah.
Well, yes, very much so, Sean. And, it's hit us by surprise. I think the market, if I look at that from the first side, things were looking very bullish for him on Monday. The market was up 3%. On Tuesday, it tanked down nearly 6% and spanked down heavily due to, as you just mentioned, not getting the majority and having to work with, a coalition government. And obviously the wheels are falling off a little bit to the Modi machine. He's still got a degree of support, but it's not as not as strong and dynamic as he'd probably hoped for naturally, and how that's going to look as far as rupee versus US dollar. Also, are we going to see a trade-off as far as continued softness to the Indian equities in the short run? The storyline of India hasn't changed. I mean, it's a dynamic country with extraordinary GDP growth over the last 3 quarters, and I think that will probably be maintained over the year ahead. So yeah, it's interesting times for the Indian economy and the growth engine of the world.
We'll have to leave it there. Thank you so much. As always, great to have your insights, Peter McGuire in Australia. And we also thank Jamie Ingram in London and Ali El Riami in Muscat in Oman.